And welcome to Crux Investor. We caught up earlier today with Tamara Brown. She's the interim CEO at Superior Gold. And you know we like a turnaround story, so we were keen to listen to what she had to say about what she inherited, what she's going to do about it, and what 2021 holds in store. If you want our thoughts and opinions on that conversation and what she had to say, and indeed the company itself, you can find that at cruxinvestor.com/club, where you can also find detailed company reports. There's commentary from experts from around the world on a variety of companies and commodities. There are training videos on there to help you with your diligence process. There's also summaries of other interviews that we've done to save you some time. And of course, there's a big thriving community of investors sharing their thoughts and ideas with each other in a nice, safe environment free from abuse and trolling. How nice is that? So go to cruxinvestor.com/club. And of course, we'd love your feedback too. So do give us a like, leave your comments below. We'll try to get back to absolutely everyone. And if you want to see what we talked about, take a look in the description. Tamara, how are you?
Hi, Matt. How you doing? I'm well, thank you.
Good, good, good. Where in the world are you?
I'm coming to you from sunny Perth, Western Australia. It's actually so bright it's shining in my eyes, which is very nice.
Oh, poor you. Poor you. Well, look, thanks for joining us. This is a story we first heard back, I think it was April 2019. We haven't spoken since, but I think you've come on board middle of last year to basically turn things around, get the plan together and then get the show on the road, as it were. So I'm excited to hear what you've got going on there. But first, we have an obligatory 1-minute overview of your company, and then I'll pick it up from there.
Awesome. Thanks, Matt. So Superior Gold, Canadian-based TSXV listed gold producer. We own 100% of the Plutonic gold operations, which are in the northern part of the world-class Western Australian Yilgarn gold belt. We have Plutonic that's been in operation since 1990, continuous production, produced around 6 million ounces of gold. So world-class mining jurisdiction, world-class deposit. It's a Archean greenstone belt, probably about 80 kilometres long by 10 kilometres wide. It's got the right rocks, Matt. This is, proven by the long history of production. And we've got a clear optimisation expansion plan with which we need to now execute on. There's a significant resource base and a compelling re-rate opportunity for investors. You
have inherited a heck of a situation. 2 reasons. Because let's say when we last heard this story, it was difficult. Chris told us that, the good stuff had been mined out. You were used to mining at 4 grams, you're now down at 2.5. And then, of course, the last 2 years, I think shareholders have expected you guys to get things sorted out and get back to producing and making money. You've walked in July. What were you brought in to try and do? Yeah, look, it was, I was brought in really to just turn things around for shareholders. We were probably one of the lowest valued gold producers at TSX. We had not performed the way we should have. And really when it all boils down to it, it's about trust. And it's because we had a 2-year period of not hitting our guidance. And it's pretty simple in mining. You need to tell the market what you're going to do and actually deliver it. And so the board hadn't made an assessment and said, look, there's more value here than we're currently getting for shareholders. So I've come in to identify what needs to be done, who's the right group or right person in order to do that. And, I've been at it now 5.5, nearly 6 months. And I think we've had some great progress in that time, but there's a lot left to do. And hopefully today we can talk about some of those things. Okay, well, I'm looking forward to it because, why I wanted to, get in contact with you guys and speak to you guys, because I saw an extraordinary headline last July, around the time you started, which says something along the lines of, you are initiating a process to maximize shareholder value. It's kind of like, well, yeah, I would hope so every day of the week. But the fact that you have to say it out loud in public, it was a case of mea culpa, we recognize that we have not performed. I think that's exactly it, is saying to our shareholders, you deserve better. We recognize it. And as a board, we're not entrenched. We don't think we're the only ones that could do this. We don't even necessarily think we're the best ones to do it. And so it's our jobs to go out on behalf of shareholders and identify, what are the opportunities here at Plutonic? And we do believe that there's a lot more that's currently being shown. And then the second part of that is, who's the best group to unlock that? If it's ourselves, because other parties either aren't willing to pay, or B, don't have any particular expertise that's better than ours, then we'll certainly put in place the right person to run it, likely from Perth. This is a bit of a
key structure previously where we had it run from Toronto. And that may be fine and well in the old days, but now during COVID, you can certainly understand that you need to be close to your asset. As a single asset company, it should likely be run from Perth.
Right, and obviously, Chris has gone. You've stepped in. Was that a kind of symbolic event? Do you feel the market needed to see a head roll, and so Chris took one pace forward? But
I think that's probably a good way to put it, Matt. I think that the street had lost confidence in his and our ability to predict guidance and deliver on that. And Chris was one of the first people to identify that the market was going to need that head. He is a large shareholder of the company, and I do believe he still sees what we all saw back in 2016, which is there's a significant amount of gold in the ground. We have the infrastructure, and we've got a whole belt to consolidate here, and so we need to get about doing that.
Right. So, and we'll get onto the assets in the company and the plan, because I really, really do want to hear this, because I love a turnaround story. You've been at the company since 2016. You've been watching this, maybe passively rather than actively. Do you think the market has given you the reaction that you were hoping for? I mean, the share price, could be doing a lot better. Do you think they've listened to that headline of we're initiating a process to maximize shareholder value? Or do you think they're still just waiting for you to make a significant move?
Look, I right now I'm focused internally, Matt, on what we need to do. You always need to worry about the market. At this point in time, there are so many things that need to be put in place for the market to see the value. We started doing that in 2020. We came out with a PEA on an open pit project that was a solid amount of ounces that were sitting there that just had never been put into a technical report, so that the markets could start to understand what is the value that Plutonic holds. It certainly had become a reputation of an old mine where, as you said at the beginning, we're starting to mine out the ore body. But that's simply because there wasn't enough drilling and development done. It's not that the ore deposit or the mineralization is ending. Our exploration results prove that categorically. It's simply that we have not done the drilling and development we need to do. To give you an example, from when Northern Star acquired it until the next 3 years of under Superior Gold, the drilling and development rates dropped 30 to 40%. So it's the age-old story. If you don't drill and develop in an underground mine, you're gonna end up with the problems we have today. So we need to do that. And so a big part of me coming in was sort of being able to say, okay, this is what needs to be done. These are the problems we need to fix, and then start to put in place the actions to deliver on that. Okay.
I think it's a fair assessment. Let's move on to the assets. Okay, so obviously you've got the Plutonic gold mine, you've got a mill, you've got Hermes, and you've also got a JV as well. I'm going to massacre this name. Bria. Is it Bria?
Bria Basin.
There you go. Okay. I know. So you've got a few moving parts. I like that you said you're focused internally initially, because you've kind of got to get things in the right order and the processes back up and running. But you've also said that you may not be the person to take this company forward. That's a kind of bold statement for a CEO to make, isn't it?
Well, I am an interim CEO. And I think we should all understand where we add value. I come from the market. I'm an engineer, but I come at it from the corporate development side of things. So that strategic piece, absolutely know I have down. But I'm not the person that's turned around underground and open pit operations in my career. And I believe that's the kind of person that needs to be running this company. We don't need a multi-tiered structure. We need a CEO that has operating experience and able to do it.
Okay, so you need to kind of get your house in order to attract that kind of person to walk in here.
That's exactly right.
Got it. Okay, so let's talk about some of those assets today, and where they're at and what you are doing to, as I say, get your house in order. So if you don't mind sort of running through what you're
sure, absolutely. So to begin with, we have the Plutonic underground mine. So this is it's got a lot of infrastructure there. We have 450 k's of development, 7,000 kilometres of drilling that we inherited. And at the operation, it's worth noting that we have two mills. We have a 1.8 million tonne per annum mill and a second mill at 1.2 million tonnes per annum that's currently on care and maintenance. So that's the kind of infrastructure that I talk about needing to utilise. This is an economies of scale story, and we need to utilise that infrastructure that shareholders already own. We have gas-fired power here, which is very, very low cost, 14 cents Australian kilowatt hour. We have the camp and Borefields airstrip, etc. But from all of that, you can understand there's a certain fixed cost here at Platonic that we need to cover before we make profit for shareholders. And as an underground-only mine, we had been getting production levels down to below that profitability level, and that's what you saw in 2020. We relied 100% on underground ore, and you're effectively relying on teaspoon mining to fill a very hungry 1.8 million tonne per annum mill. And so I believe the opportunity here is to return Platonic to what it had been for many years under Barrick and Homestake, which was having an open pit and an underground that's supplemented with grade. And so everywhere you put a drill hole at Platonic, there is gold. And so this, philosophy or this strategy certainly bears itself out, because we have the resources and we have the ore body that can deliver this. Internally, Matt, we often talk about the fact that Platonic maybe should have been a super pit, because there's a lot of gold, and it's just whether that grade can sustain underground mining or whether it should be more bulk mined as an open pit. And so really that's what we're talking about. So that's the first piece, is that underground. Second piece is the open pits. So last year, as I said, we didn't mine any open pits. And so in 2021, we'll be bringing online the Platonic East open pit, which is previously mined pit close to our mill. It's simply a pushback at better gold prices of that open pit. Very simple, not very complex, already permitted, ready to go. So we'll be bringing that online, and that will start to take the pressure off the underground, where you don't have to be chasing tons. You can go back and focus on grade. And so beyond Platonic East, we have three other deposits on the Platonic mine property, which is Salmon, Perch, and the main pit. And the main pit was a larger project. It has in and around 500,000 ounces in the total shell, but we have come out with a PEA that's quite constrained, of smaller pit size of 350,000 ounces. But that gives Platonic 6 years of 1.2 million tonnes a year to supply that hungry mill and be the steady base load of production. So we're very excited to come out with that at the very end of last year in December. And I don't think that the market's really taken, it hasn't had a chance yet to digest that. So that's a big piece of, absolutely we need to optimise the underground, but bringing those open pits online are very important. Next piece of the strategy will be utilising that second mill. So we have the additional 1.2 million tonne per annum mill. And the idea there is to consolidate the belt. There are quite a number, in and around a dozen different gold deposits that have already outlined resources within 150 kilometres of Platonic. And there's no use, the investment community shouldn't be investing in building another mill when there's capacity here at Platonic. And so that's the strategy with the second mill. So, you can see it's a staged approach. We have the current underground operations that should be in and around 70,000 to 80,000 ounces a year. Add in the open pits, we should get to around 100,000 ounces. And then you have the opportunity to use that second mill to go up to around 150,000 ounces. So that's the strategy. That's what we see. And then obviously any great gold deposit, you want to always talk about the exploration upside. And we have a lot of expectation on that end of things as well.
Okay. You're going to need to finance this. You raised $15 million back in October. Yes. How much of that have you got left?
Yeah, so we've just come out with our 2020 production. Happy to say that we delivered on our guidance, which was number one, gaining back that trust in the market. We also released our cash position. We have $17.3 million US. And so we have invested already. So the things that we've invested in are eliminating NSR royalty on this property, which we think was absolutely accretive for our shareholders, an important thing to do. Royalties should always stay with the asset. And then we invested in a third drill rig that is completely dedicated just to exploration. So the problem that Platonic had got into is that it was a hand-to-mouth, one stope to the next, and all of the equipment was being utilised just trying to fill that mill, chasing tons. And so now we've carved off and said, okay, we're effectively having a separate business here. We're going to be opening new mining fronts and creating new stope inventory. And this drill rig's a big part of that. We also we invested in revitalising our underground fleet this year. Part of the money went for that, where we added 2 new trucks and 2 new loaders. The equipment here at Platonic had got very high hours. It was getting older, was more often in the maintenance bay than it was making money for shareholders. And so we've brought on new equipment. And we also did a tailings storage facility raise. We upgraded our airstrip. So we're investing back in the assets so that we can deliver better productivities, more profitable operation going forward.
Okay, the market's not reacting to these stories yet. Okay, so
No.
you're probably going to need to raise more capital this year. Is that fair to say?
Look, it depends on results. So, and I don't want to, I'm not, it's just simply a case of there was more money available than we raised. We were oversubscribed. There was more money, but we didn't at that point in time have the projects with the right return. So I have a certain minimum IRR that I'm looking for in any capital we spend for shareholders. And so we took the money that we needed to do the first phase, which is going out, following up on the exploration results that we released last year. To give you an example, we had 2 results, one from the Indian zone and one from the Baltic. In the Indian, we came across 56 grams over 15 metres. And that's a kind of result. It's within 100 metres of existing infrastructure. You don't just put that hole out and then stop. And unfortunately, that's the case the company had got into because it didn't have the capital or the balance sheet available. So we raised this money on behalf of that next drill to go and follow up on that kind of a drill result. And the other one was in the Baltic, which was around 40 grams over 6.5 metres. Again, this is mineralisation that should be very quickly put into resources, reserves and into our mine plan.
Right. Okay. I mean, you're working in a very positive gold environment price, certainly in Australia as well. Very, very positive. The reason I asked about, how are you going to need to do some funding this year? You're going to have to make a choice as a board as to the cost of that money. Okay. And then partly the market decides by how they're valuing your company at the moment, sitting at around 86 million Aussie, which is probably quite far from where you want to be. Are some of the options you're looking at potentially offloading some of your assets? You've got a spare mill. You could sell that. Or do you think? Would you think the market's going to give you enough credit, Tamara Brown, enough credit and time, therefore, to say, well, actually, maybe there is a long-term story here. Maybe they can get this second mill, working at full capacity too. In which case, the revenue will come. Yeah,
look, we're going to be free cash flowing this year, and a critical piece of our story is that back in 2019, the company did a gold loan. And so it has been struggling with this underground operation to repay that gold loan at the same time as investing in the drilling and development. That comes off in June this year. And so you'll see us go through a transition on our cash flow. I do expect the market to recognise that when we go through that catalyst point where we become significantly more free cash flow. And so I think the answer is we're not comfortable taking dilution in here at this rate. We're actually probably trading in and around where we did the raise. We would expect to have positive results for shareholders. So we have yet to release an exploration result since we raised that money. So that's the first catalyst we need to get out, go and show shareholders why we've raised this money on behalf of what. And then we have actually spent some of it with respect to eliminating that NSR. That was an immediate accretive.
Yeah, I think the NSR component was a smart move for sure. But if I come back to let's talk about, there's a lot of parts there. The exploration, for instance, one drill, that's not really going to make a bit of difference in the market, is it?
Everything's relative compared to 0 drills. Like we managed in a 24-month period to come out with 5 holes, and we released them, and they were excellent. Got the ore body worked out. It's not like we have a low hit rate. It's a case of actually being able to dedicate that drill to exploration versus production drilling.
We'll say you've got the ore body worked out. What do you mean by that? What's the data points that allows you to say that?
So it's a complex ore body. It really is. It's not a simple continuous zone mineralization. It's folded. It's a series of narrow layers, and I would say that previously different chief geologists, so we've had some changes at site, which is important to note. And previous chief geologists have maybe not had the targeting that our current executive has. And he was with Platonic back in the Barrick days, went off with Barrick and then has come back to the operation. And so it was under his jurisdiction that these drill results came out in June this year. And so as far as I'm concerned, he deserves to be given the money to continue on with that program, because if he can continue to hit, 56 grams over 15 metres, our shareholders will continue to give him money.
Right. And Keith Boyle was, I think he just joined us. Well, he had been a consultant and he joined the company as COO back whenever that was, 18 odd months ago. What's his role in all of this?
He's a COO and he's doing a very admirable job. It's not an easy deposit. And when you think about the fact that they'd got into the situation where they were remnant mining only, and remnant mining, if you're familiar with underground mines, it's more complex. It's not as safe. It's not as productive. You're going in and around old stopes in order to take the back of a stope, simply like an open pit mine. When gold prices change, the waste becomes ore. And so I think that things that Keith have put in place are starting to bear fruit. And those are the kinds of things as improving our frontline planning and scheduling, focusing on dilution and our mining and blasting practices. And a key piece of what he did was bring in a new GM. And that gentleman's been there now 12 months. And he's brought the cultural change that we needed with respect to what's so very critical, which is safety and culture at the operation. Understanding safety comes first, but also to take account for our own actions. There was a lot of people blaming others' previous situations, not taking account for the mine plan, and you can see that with the lack of hitting our guidance. And so for me, day one, that was the most important thing. And so we did hit our guidance since I've been on board, and that's going to be an important piece. You need at least 3/4 for the market to give you back some credibility that you have your operation under control and can deliver what you say you're going to deliver.
Okay. You are presiding over a turnaround exercise. You're trying to steady the ship, patch up the holes, and get it into a position where you can attract a world-class CEO. Because you're the current CEO, but you recognise that perhaps you're not the person to move this forward. So the steady state that you're in at the moment, where do you think you need to get to? What more do you need to show the market and show a prospective CEO before someone's going to give you credit for having done the job you've been brought in to do?
Yeah, look, I don't think that, I think that the things are falling in place. This story is starting to tell itself when you take a look at those separate buckets of value. So the underground, obviously, it's going to have to deliver on the production at the costs that we say. It's going to have to deliver positive exploration results that gives the market comfort and any incumbent comfort that there is life ahead at Platonic Underground. We've already come out, which was a very key piece, with that main pit PEA, which has significant value for our shareholders. It's got a $120 million NPV, a 35% IRR, and relatively low capital of $82 million, which is all pre-strip because the deposit actually dips down, and so it's simply stripping off the waste. But there's no complexity. There's no mill or other infrastructure that has to be added. We know the mining costs because we've open pit mined here before, so the costs aren't a risk, and that adds 60,000 ounces a year in production for 6 years. So that piece, I think, is the fundamental piece in saying to the market and to anyone coming in looking at this opportunity, Platonic has a solid life ahead of it of making money, of making free cash. And so I think that's the key piece for anyone to know that you've got a strong future.
I mean, how do you think you stand out against peers or people that you would consider peers? Less complicated background, of a certain size as well. There's a lot of companies of your size. It's tough to kind of stand out from that, isn't it?
Yeah, look, I liken Platonic to, and it's going to be lofty when I say it, but names like Richmond, where, it's a tired, people at one point in time considered it a tired asset. There was no life ahead of it. Obviously, it's the exploration piece that's key, but that's what Plutonic gives you, because this ore body is showing no signs of pinching off. You might look at Fosterville as another example. Absolutely, these deposits did have a period in time where the market had nearly given up on them. But with the right investment and the right strategy behind it, and I think that's what that open pit production does, is it gives you the lifeline to be able to do this kind of work in the underground without having the pressure to fill a mill at the same time.
Right. And talk to me about SGI in terms of their involvement, historically and going forward.
You mean Northern Star?
Yeah.
Yeah. So Northern Star owned the asset, divested to us, took shares as part of the transaction. In this recent financing, we diluted them down. They did not participate. And I think if you take a look at Northern Star, they've gone on to bigger things, and that's what Plutonic was in their history. It was one of the first assets they acquired in a big M&A string. It was Plutonic and then Jundee, and they quickly identified that Plutonic did not provide the 200,000 ounces a year from underground that they had been hoping for. So they really only owned it for about 2 years. They did a great job of investing, putting in the drilling and development it needed, and then went on, sold it to us, kept the shares because they believed in the asset. They still do. They're close to us. We have a director on the board. They were supportive of this move that we've made here with the management change. And I think they do fundamentally believe in the asset, but we all agree it needs more drilling and development.
And how do you tidy up the corporate structure? Because, again, I think people looking at it go, it's complicated.
What's complicated? It's very clean to me. We have no debt. We have a gold loan. It's going to be paid off in June. We have a very simple balance sheet. And so for me, it's a very clean story. The problem we've had, the only problem is not delivering on our guidance.
Right. Okay. And do you think, so 2021 for you personally, for you, Tamara Brown, is about getting it to a state which you think the market, one, understands what you're trying to do, understands your plan. And have you set yourselves any other targets? You personally set yourself any other targets? Absolutely,
a lot. So obviously we understand the market's very interested in those drilling results. So getting out drilling results that follow up on the Baltic and the Indian is critical. Making sure that we pay off that gold loan, which it will happen. It's a gold loan that comes out of our production in June. I think that will be a big trigger for the company. And then advancing those open pit projects. We'll see the first open pit production in 2021 coming in from Plutonic East. And then we'll be advancing the Hermes South project and the main pit pushback. So all of these projects have their own catalysts along the way. So, for example, with the main pit project, as I said to you at the beginning, we have a very constrained small pit because we have some surface physical constraints that there was no reason to go around. And so one is a heritage survey that needs to be done. There's a potential to remove that from this project, and that would add a significant amount of ounces and significantly improve the value of that project. Another is looking at trade-off studies on the mill. We have the opportunity to move some of the mill infrastructure because this project butts up right against the mill. And so completing those, as well as doing the infill and extensional drilling that needs to happen. So I think that the company has a lot of catalysts over the next year. First and foremost, we'll be continuing to improve each quarter our production and our costs.
But what are your goals? What do you, at the end of 2021, you go, success for you personally means what? Having found a new CEO?
That would maybe be in the list, but first and foremost is unlocking some value for shareholders. So seeing our share price start to reflect the true value that we have here, because we have $2.5 billion in infrastructure. We have a significant reserve and resource. We have 5 million ounces now in total resources, and we're trading at, as you said, $80 million. So for me, that is, shareholders come first. And so giving them back some value with some appreciation in that share price, getting out and telling the story, which we didn't focus on last year, because we wanted to start ticking off some of these things. The main pit PEA was an important one. Hitting our guidance is another one. So starting to deliver on these things that we can talk to people about And so we're doing more marketing and hopefully talking to you again.
Well, I hope so. So I had a conversation there earlier this morning with a group, and say, people, you can't expect management to do things for free, right? You've got to pay good people to do a good job. So how have you been incentivized by the company, and what are the targets that set you specifically? Is it around share price? Is it around market cap? Or is it just around the deliverables or at an operational level?
It's a combination of all. And so it was very clear when I came in that I was doing this because I had that corporate development experience, the understanding of who was doing what and looking for what in the marketplace as far as M&A goes. We had a number of unsolicited inbound interest on Plutonic. It's a very strong gold market. It's a great mining jurisdiction. We were very lowly valued. And so it was clear that we needed to come clean with the market. I think you saw some speculation in our share price right before I took over. When I came in, we, evened the playing field so that everybody understood we were looking at a strategic process. Obviously, at the same time, I brought down guidance significantly in order for us to deliver on it.
Well, I thought that was an interesting point you make, because the share price just before you came on board, there's a massive peak there. And then the announcement of you taking over, share price fell away. So you're saying that was due to speculation around M&A, not a reflection of the market's view of you?
Well, obviously we could. I hope to think that I personally didn't bring it down that much, but it could always be the case. No, I do think, in all honesty, it was a combination of the speculation not resulting in a takeout bid per se, and obviously when you take off 30,000 ounces off a junior gold producer's profile overnight, you're going to have a revaluation.
Do you think, what was the market speculating? Who were you in discussion with? Apparently, was it anything to do with Van Gogh?
Well, I don't think Van Gogh would elicit that kind of they don't have the capacity maybe to pay the price that the market was speculating. But I can say that the strategic process piece that I'm working on, most of my energies are on talking to the belt. So Van Gogh, Sandfire, AIC, all of the parties in and around Westgold, everyone who's in and around the Plutonic Mary Maya Gold Belt, we're talking to, making sure people understand what our business philosophy is, what we want to achieve here. And there's significant opportunity there for shareholders. And so that makes a strategic process complex. You're not just looking at what's it worth to someone else. You're having to take a hard look at, well, what happens if we can deliver on this consolidation for our shareholders? What does that look like? And is it better to do that first before we consider external offers?
Okay. And if I'm an outsider looking in at you've got two mills. Okay, one in care and maintenance, admittedly. I don't know how much more money you've got to spend on those mills. You're quite cheap. You look quite cheap to me as an operator, as another operator. So I don't think the market recognizes that at the moment. So M&A seems to be the way that this story gets exciting. You guys don't have enough. I don't think you've got the ability to go and raise some capital to go and do M&A yourself. So would you welcome an approach now, or is this something that you think maybe in 12 months' time is going to be more appropriate for your shareholders?
Yeah, look, I personally, this is a personal view, not a board view. I personally feel that there's more upside for shareholders here for us to go and execute on the number of things that we've outlined here and deliver that to shareholders before we consider external proposals. But there's always going to be interest when you're trading at this low valuation, Matt. That's going to be, but as you said in the beginning, that should be our day-to-day, everyday job of unlocking value for shareholders.
Absolutely. Okay, final question, which is you said you know and you understand the ore body. Do you think you can find higher grade material on a more consistent basis going forward? Absolutely.
Absolutely. We just have to drill. You're not going to find it without drilling, I can guarantee that. And so until now, we haven't been drilling. And so that's our mandate now, is go and drill. And I think that the results will be in the pudding.
Okay, Tamara, look, appreciate your time today. We love a turnaround story here, so keep going.
Terrific. Thanks so much, Matt. Thanks for having us.